Hello, Duncan. Hi to all. Hi, Barry. Hiya, Juanes. Hi, Christian. AI Pete, good evening, one and all. Tom, evening. Tom K and Brian. Hello there. Is there anyone still enter the waiting room? View. There must be a way of getting rid of the waiting room. Admit all. Somebody find that out if you can. I did it last week. I couldn't find what it was. Let's look. Let's look. No, can't see it this week. It's so annoying. Why do they mess around with the format? You get used to the format and admit. I'm trying to get rid of the waiting room. I don't want it to be there. I want to disable the waiting room, and it's not showing me how to do it, which is slightly annoying. Admit. Waiting room. I can't do it. I saw it last week. Mark, sorry, there's people can. Normally, I can disable the waiting room, people just come straight in. And now, with this new format, that Zoom sits on a hide where the waiting room is, which is so annoying. Let me share this. Let me just share this screen. And maybe it'll happen there. No, no, I can't see it anyway. Waiting room, host tools, participants. Can't read it. Anyone, any idea? Because I'm sorry, some people are still stuck in the waiting room there. Anyway, if you know, I do it. Wall 100 in the waiting room. Anyway, listen, I got to figure out a way of doing this. I did it last week. I don't know what's happened there. But there we are. Welcome, everyone. Wednesday weekly webinar, of course, 1st of April, 2026, Q2. What a week. What's your thoughts? Because the market's rallying. In fact, I was looking at this earlier on RightMove. Estate agents have accused RightMove of charging excessive fees. I mean, in fact, look at the share price on RightMove. I mean, it's ripe, isn't it, for a bit of AI disruption? But that's not. It was, of course, it's still market dominant. And so the thing you have with RightMove is that whoever, even if you set up an AI competitor, you still need the traffic, don't you? So, and Rightmove have that. So I don't see. I don't know. I mean, they did come out saying they're going to spend more money on AI, and as a result, their profits are going to go down. But who knows? Admit. Has someone going to answer the waiting room issue? Gareth is there. This is going to happen. Right, I've got to figure this out. Is anyone going to answer? Disable the waiting room. I'm in, Graham. Steve B. Hi, everyone. Yeah, I've got to figure out how to disable the waiting room because I can't do it at the moment. And I did do it last week. And I've got to figure out how to do this. Host tools. Oh, there we are. Host tools. Got it. I've disabled the waiting room. Host tools. Remember that for next week, anyone? Okay. If that's it. Host tools. Why do they make it? Just make it easy. Yippee! There we are. Yes. So there we go. That's right. It's gonna disrupt a lot of industries. AI, of course, and I mentioned last week about advertising at S4 Capital. They are doing AI. They're not doing. It was a typical industry like legal professions as well. Billable hours. It's not going to happen anymore because if you've got AI doing a lot of the work, which is 10 times or 100 times as fast, they've got less billable hours. So they're going to change the entire model will change. And of course, S4 Capital are sort of adopting that and creating AI engines for their competitors. Anyway, so what's your thoughts on? I mean, look at the S&P here, okay? The S&P 500. And I did say last week, I covered this last week quite a bit on the webinar. I said basically, if it gets down below 25 on the RSI, relative strength index, it's a screaming buy, and whenever this has happened, it's not the first dip. It's a big dip, then it'll happen again, but then it's a screaming buy. I mean, look at that. Feb 2020 went down to 18, low 20. Wow. And yesterday it did hit sort of just below 30 last few weeks. So you tend to get a big bounce when this happens. But I don't think. What's your thoughts? I mean, Trump's coming out with a statement about 2 o'clock, 2 a.m. UK time about the Middle Eastern war, and I'm thinking, and the markets are rallying because of that. But he's created a whole new issue, isn't he? He's created lots of problems. He hasn't solved anything. Nothing's been solved. So what we got now is a disrupted Middle East, which countries are warring with each other. You've got the oil and gas prices, or oil prices, above $100 a barrel. And now the Strait of Hormuz is still not open. So people have to get individual. If he just pulls out from there, Iran's got a choke lock on the Strait of Hormuz. I don't see nothing's been solved. So I mean, it may be good for American stocks because, of course, they're largely energy self-sufficient. But the rest of the world, it's going to be an economic problem. So I don't see this as a solution at all for the rest of the world. I mean, what's your thoughts? Is this a bear market rally, or is it maybe an American market rally? But I'm confused by this rally. I mean, you will have, whenever you get to a big sell-off, you will have a sort of. Let's go back to 2022. You get these massive rebounds. I mean, look at this, below 200 moving average, rebound again, rebounds, and all of a sudden it sort of collapses and it goes down. And that was down, I think, from top to bottom there, but 27% drop in the S&P 500. But I'm not convinced this, what's happening at the moment. I mean, he's changing his goals all the time, isn't he? So are you convinced by this rally? It's nice to have a little rally, but I'm not convinced by it, What's your thoughts? Is this a bit of a correction rally? Alex says, my thoughts, Trump can jog off. I'm now well over 20% down from highs, and portfolio is now so far underwater. It's in the red, including my pension fund. No choice but to hold and try and wait it out. We'll have to sell some stuff next week, be able to move into new ICA. Yeah, it's so annoying. I know. He's not so. I said, well, that's why I call him Captain Chaos. He doesn't solve anything. And everyone just, licks his ass, basically. Everyone around him saying, well done, Mr. President. You've just created chaos at an expense. Lots of people being killed. And so I don't know what he's going to do. If he announced, I don't see a way out of it. There's no victory here for the Americans at all. They haven't solved anything. Okay, they've destroyed a lot of their weapons, but they can still carry on. They're still carrying on, the Iranians, still shooting in neighboring countries. Well, hey, in at last. Hi to all. Hi, Tony. I've moved 50% of my stuff into money market fund for short term to mitigate the potential further downturns, says AI Pete. Yeah. Trump has been loading it up about all the oil he's getting free from Venezuela, says Tom. Yeah, I know. He's going to claim a victory and walk away, leaving a big mess and a worse situation before. Not convinced by the rally. Yeah, I don't think so. I focus on the macro caps and ignore the short-term macro. James, yeah. And Robert says, bear market rally, I reckon. Private capital still lurking. Yeah, I think there's a lot of short covering there. People going short and then covering it. Business as normal. Yeah, I think, well, the trouble is, there's talk now that if he just leaves, Iran are in charge of the Strait of Hormuz. Whereas before there wasn't. There was free flow. So how has this solved anything? It just made it worse. And the thing is, the Americans will be affected because, like I said, 20% of the world's fertilizer sort of comes through there, and helium comes through there for chips and all that stuff. So they will be affected. Hopefully, we'll make Mad Ed have to reopen drilling in the North Sea. Yeah. Well, there's lots of. I've been watching lots of bearish comments from oil experts on Twitter. And they seem to think this is a much worse shock than in 2022. Energy shock that's going to happen. It's only a matter of days before it sort of rolls over the markets and oil shoots back up. So yeah, I'm standing on the sidelines with a decent chunk of cash, but I'm I've even reduced on my S&P just today. I think I'm going to just reduce on that anyway, because I don't believe it. Don't believe the hype. Ugh. All right. Yeah, April Fool. I think that maybe Trump should have done that. Just come out and says, it's okay, just started a war, just April Fool. I haven't solved anything, just a bit of a joke for everyone. But I think sooner or later, I mean, I think there's a poll out saying about 2/3 of Americans do not appreciate the war, don't want to get involved in it in the Middle East. So, he's going to take a shellacking in the midterms unless he starts doing something quickly. So either way, whatever he says at 2 a.m. this morning, if he's pulling out, it's a nightmare. If he's going in with boots on the ground, it's going to be even worse. It's going to escalate. I mean, I think he thought it'd be a lot easier than this. Now he starts blaming NATO for not getting involved. So you started it. You didn't even tell NATO. They're a defense organization. They don't go on attack with you. Anyway, welcome everyone. Old, new, midterm members, whatever. Join the chat group if you're new. On the blog section of the page. In fact, the menu will be changed soon because there's a couple. I want to put movers on there. And I'm considering. There's so much stuff now you can do with AI. Just a quick yay or nay, and I don't know whether it's just I'm getting carried away really, but I've been looking at two things I can add to the site, relatively easily with low maintenance from my end, which is very good. There's AI updates coming very soon, which means I'll be able to cover a lot more companies. But I can cover pretty much broker upgrades and downgrades, and also what else is there? There's directed buys. It's quite easy now with AI to put it on the site and get updated. I mean, it costs me money, of course, to develop it, develop and pay them, but it won't. I don't have to check it, and I'll check it every day, of course, in case it falls over. But I can do it in a sort of a daily update. You can just show directed buys, or in fact, of those two, which do you think was better, directed buys or broker upgrades or downgrades? Which is better? And what I was thinking of having, directed buys. So you'd have the company, director, their role, how many shares they bought, what price, how much in total. Because of course, you can get directed buys by. I never understand directors who buy just $1,000, a couple of grand, thinking, who's that convincing? But when you get a decent chunk, like above 100 grand or something, that's especially in smaller companies, it's worth something. But is there any you prefer, directed buys or broker upgrades, downgrades? Because every day you get companies, brokers come out and upgrade stocks, downgrade stocks. And of course, when you get upgrades, it tends to be very good for the company, and it tends to follow on through the price. But also directed buys can be, quite good. Anyway, what's your thoughts? What would you prefer, directed buys or broker upgrades, downgrades? You could probably do both, but Duncan says yes to both. I think TAT would be very useful, says Steve. Thanks, Steve. Which one? All good, maybe, perhaps not for all market. Yeah, there's not a huge amount on a daily basis, so it would sort of be in. Let me just share this. So it'd sort of be in the style of that, where you have on a daily basis, we'd have like company, director name, director title, amount bought, total amount, and be like that on a daily basis. So you'd get, and then each page would be a day. You scroll through, and same with directed by, same with upgrades, downgrades, kind of thing, that kind of format. So you can just see. I don't know if that would be useful. But let me know. Let's look. What else is there? Tony says yes to both. Graham likes directed buys. Steve directed buys. Tom says both. Broker upgrades, downgrades, says Duncan. Broker upgrades were good. Directed buys easy to get elsewhere. Yeah. Both defo. Both says one else. Broker one says Barry. Directed buys for me. Well, there we are. It's hard to see, isn't it? Yeah. Maybe. Yeah. We'll try it, can't we? Try it anyway. Can try anyway. See. We'll see. But yeah. And coming soon, you'll have. There's a couple more things happening yet. I haven't put the movers and PSI on the website yet, the price strength index, because there's another filter happening. So there'll be, for example, I've been looking at back at charts, for example, looking at where companies start making a significant move, sustainable move. Of course, it has to be backed up um, by the fundamentals, pretty much. But I'm thinking when a company goes from, for example, Synthoma, what's that? Oh, Raspberry. They were only listed back there, didn't they? They've shot up to where are they then? RPI. Wow. Oh no, they fell off a cliff and then they come back up. Yeah. Okay. So that's going into when a company tends to go into yeah uptrend, it's getting towards parabolic now, extended. So that's maybe a bit over the top. But yeah, when a company goes from sort of positive, strong, and then strong to uptrend, that tends to be a good sign. So there's going to be a filter on here where you can see companies that have just gone into uptrend, from strong to uptrend, not from the other way down. So if they come from parabolic to uptrend, it's not good. They've gone from strong to uptrend. So I put that on there, called uptrending. And then I'll put that on the blog's going to move over to this bit here. And I'll do the update on. I will actually update what's going to be updated in the blog because there's lots of stuff that's gone on that I haven't sort of properly added to the site. There's an update tomorrow happening as well that pulls it together a bit, and then it'll be updated then soon. But anyway, lots going on. But listen, I've just been looking at things you can add to the site that's maybe helpful that doesn't take a lot of maintenance on the back end. So maybe add those directed buys, just knowing where to put them all. Yeah. So anyway, I'll find places. Anyway, topic of the day: look within, and you shall find the answer. Yeah, that's the story today. Let's look at the microcap database. Let's start my holdings. Look at that. These two last week, it's a bit of a shellacking. The portfolio's taking a bit of a hit. These two are in, profit last week. Just tells you what a funding circle. Not last week, before the sort of war started. So they've held up okay, but funding circle. Can't think what's going on here. It's one of those things where you think, is this just worry and a bit of a sell-off fund thing? Is it to do with the funding? Because, like I said, it came out with the trading update ahead of expectations, shot up from, gapped up pretty much from 129 up to 176. And then since the war started, it's just been coming back down and it's back to where it was previously. Just shows you there's always an opportunity to buy a decent company, but it has been coming off a little bit. But who knows? I bought a little bit more SFOR capital. Ramson's, I bought a tiny bit more. I'm going to wait until it gets in a bit of an uptrend because gold price is coming around a bit again now, isn't it? The gold price is recovering a bit. I think this signifies, when you have a sheer panic sell-off, the only safe haven is cash. People say, "Oh, gold is not in a panic sell-off." It's not. Everything goes cash. So we've had this, excellent rally, and now it's starting to rally a little bit. It may have to go sideways for a while, but it seems to have hit a low and recovering here. So, when you think of it, the high was at 5,290, went at 4,819. Now Ramson's ahead of expectations twice, and that is now getting back to where it was previously. So the sell-off is a bit overdone in Ramson's, I believe, because it's come off from 460 to 365, and they've already announced they're going to have record profits. So, and decent cash and decent things. So anyway, anything else? Yeah, I've still got a chunky bit just in cash, 7.1% in cash, 64.8% in the money market fund. Xeros is obviously the biggest loser, but 1.1% of the portfolio. It does any movement that it doesn't mean it at the moment. I mean, if they came up with a new contract, then I'll buy more. I'll double my holding probably, which will reduce the loss, and still only take up like 2% of the portfolio. It's not a big thing. But yeah, just looking at oh, by the way, this is quite a good looking chart. I mentioned the SFOR capital twice here. And I tell you why this is a good looking chart. So we've got this break of the 200-day moving average, right? That was on a ahead of expectations trading update. It was they did have a downgrade, and then they said, "Oh, it's not going to be as bad as we thought," and so they upgraded. Now, of course, if you watch the last week's video to understand the story behind this, it's been a dog of dog and all dogs, and I said, it's always good to keep an open mind on companies because I previously I've written off companies that have badly performed for years, and I've just not looked at them. They've had good tech, and I've not even looked at them, not trusted the management, and then all of a sudden they've gone into multi-bag. And I should have kept an open mind on that. But like I said, since January, it's drifted down below 200 moving average. And you often get this when you get a big break. Now, it hasn't done that, broke the 200-day moving average, since here, pretty much. And you can see they sort of broke it and then didn't really get above anywhere. And of course, that was at 52 pence, which is double the valuation it is now. And their debt has come down and everything. But as you can see, break that. And now a previous high at 28 pence, it's breaking that, which is a good sign. And last time we sort of had a bit of a couple of rallies, there was never any new highs there, like I said, bigger valuation then anyway. But what's interesting, if you want to look, is on the database, Singers, the brokers have just started covering this now. So I've got, before I was just using figures from Dowgate. I didn't really trust it that much, but Singers have started covering them. And so this comment here, this broker comment here was on the 31st, updated it, which was what, yesterday? Yeah, yesterday. And it's an initiation coverage. So there's a lot of information in there. Look at that, the coverage of that. So if you're interested in that, it's worth reading. But look how much is in there. So initiation, notes are always quite detailed. So yeah, so it's worth a read. But the figures are updated, and they do say still going to be loss making this year. They reckon this is still, again, it's not to do so much with cash costs. It's more impairment still of the companies they've acquired, and they've acquired about 30 companies from 2018 to 2022. But so they're halving the reported loss this year. But it goes back to 18 million for 2027, and that puts them on a PE 11, and it gets again almost, well, not doubling, but 62% growth again. They're saying even on flat top line because they're cutting the costs out completely. So interesting. I mean, it's these aren't forecasts; they're not 100% accurate. There's lots of things that can change, but they're saying even based off their cost cutting, then that's likely to happen there. So very interesting move here. You can see here, higher high, and obviously get some higher lows, breaking 200-day moving average. So it's looking like it's going in the right direction. And look at that, 1, 2, about 1, 2, 3, 4, 5, 6, 7, 8 up days. That's a good sign. You get, I mean, it may need to go sideways for a while. Now it's broken this, but it's showing essentially there is increasing demand for the shares, whereas previously every sort of rally has been sold into. So the sellers have swamped the buyers. And right here now, it looks like the buyers are starting to win. And look at this. Look at the 200-day moving average. It's starting to turn up. That hasn't happened since basically here, back in 2018, where it went from £1.30 to £8.50 a share. So you can see the 200-day moving average is starting to move upwards now, which is a good sign. Signifies end of a trend, start of an uptrend. So there we go. But it's not. If it does what it's going to say it's going to do, it will be potentially a multi-bagger. But it's not as easy. They are changing the entire way marketing, PR is done. Pretty much advertising is done by using AI engines and charging for subscription model they're going to, rather than charging for billable hours, which is a huge change in the landscape. So if they pull it off, it should do very well. But can they pull it off? That's the thing. What a shame it is. So that's what it looks like. Literally, that's cash pretty much. Yeah, 82% cash. And I try and keep losses below 3-5%. I'm not happy at a loss if I'm on over sort of if I don't want to be sitting on a loss if it's taking up more than 5% of my portfolio. So I try and keep them sort of below that, 3% less maybe if it's a loss, and it doesn't mean anything. Then if I start moving in the right direction, I'll increase my holding. So 4 companies in profit, 19.7%. Holding in profit, that's including the money market fund, which is what? It's 0.13% in profit. But there we are. It's in profit. 27% equities, 1% fund, money market 65, cash there. So yeah. I got a funny. I don't know about this. I'm not convinced in this market. I'm just a little bit wary of it. That's all. I think there's going to be something not quite right. I'm a little bit bearish. Robert says, what are governments going to do when so many jobs go with AI and robots? For example, you won't need any lorry drivers as lorries will be driverless. Yeah. Yeah, I mentioned that on the podcast. I looked at the figures that there's 15 million, not even in lorry drivers, but in taxi and ride hailing jobs around the world. 15 million people. And they reckon by 2030, 80% of those will be, out of work. What? This is nuts. Yeah, and it's a lot of the time, AI, they'll tell you the jobs are going to be lost, but new jobs will be created, they say. But they can't tell you where the jobs will be created. They can tell you where the jobs will be lost. Because I've heard this guy, one argument recently on CNBC, he was in charge of an AI company. He said, for example, there wasn't any such thing as an iPhone repairer 30 years ago, but now there is. Okay, you can sort of see the premise. I mean, you have to have people, monitoring AI, but it's not 1-for-1, is it? You won't have one person looking after one robot. You'll have probably 10 robots or 100 robots and one human. So yeah, I don't know. There's all this talk about in the end universal basic income, isn't there? Everyone will get some income because we won't have any jobs. But if you have any jobs, do anything, you're not going to buy anything. I don't know where. Barry, I recommend your book to Paula from Personal Group. She said she will buy it and let me know what she thinks. Yeah. So I had an email from them actually saying, would I like to do an interview? So I said, yeah, up for an interview. So I may be interviewing Paula from Personal Group. Maybe it's the 24th, I think. Maybe. Don't know. Good to Silver Beaks. Yeah. I know it's I think it's sometimes sell-offs are not bad because it makes you be a lot more selective and be just looking at things a bit more, and there's no harm standing back a little bit sometimes. Topic of the day. Topic of the day. Look within, you shall find the answer. Very spiritual, eh? There's an obsession, isn't there, with finding a new hot stock all the time. What's a new one? Any new tips? Any tips? Give me a new stock. Yeah, it's gonna be, but it is an obsession. I like to say I cover a lot of stocks, and you'd be surprised. There's not that many amazing. I mean, if there's some stocks out there that may multi-bag, but they're very high risk, and the chance of them doing that are few and far between. So sometimes you're better off just whatever. Well, I mean, I'll stay here. The problem is finding a new hot stock is not easy. Also, when you buy a new stock, you are emotionally heightened. And this is always the problem. This is a problem I always have. When I write these things, I'm not lecturing you. It's a note to myself, pretty much saying, understand the flaws of a human. It's like whenever you buy a new company, so you tend to be a bit excited about it because you've done a bit of research on it, You tend to do a bit more after you buy, a lot more after you buy. It's like, oh, what have I bought? But you think, oh, this is going to make me rich, going to make some money off this. Yes. Ooh, I mentioned this in the book a lot. Tend to be emotionally heightened, very excited about the stock that's going to make you lots and lots of money. As you're likely to invest a bit more than you should. You ignore some rules. I can chuck half my portfolio in this. The more I put in, the richer I get. And that's the issue, isn't it, really? It's like we as investors and humans, we think on a daily basis for share prices, when actually we should think in terms of years and months. I see moves in the chart and you realize, like, for example, that chart I looked at there with S4 Capital, you see companies, break 200-day moving average, and it's not unusual for the share price to come back. If the fundamentals are improving, and they break 200-day moving average, and they come back. And like many of the winners, the biggest winners of all, have done that. They come from a recovery position where they've been underperforming. They turn it around because you get the people underwater on the stock, break up. I'm getting out on that rise, on that 20% rise. I'm 50% down, 20% rise. I'm out, and they come back. And then all of a sudden, some of the people who are lost are out, and you start getting a bit more demand for the shares, and some of the supplies, sellers are cleaned out a little bit. But you like to invest more than you should sometimes, in companies. And you also like to have learned about the stock, because the amount of times that someone has told me about a stock, or asked me to look into a stock, and they've heard about it recently, I look at the chart and it's like just spiked right up, gone up 100% or something ridiculous, normally a nano cap. And I'm thinking, oh, no. And the reason why you've heard about it is because it's risen a lot, and it's getting a bit of attention from others who've maybe invested just before you, or maybe some of them a bit lucky and invested earlier on. Who knows? Or maybe they've been underwater for a long time. It's finally starting to rally a bit. But stocks get a lot of attention when they've risen a lot. And so you tend to find the companies, the people that are banging on about stocks on social media, it's risen a lot. They may be underwater, but they want to pump it even further. Stocks at the bottom get very little attention, which is a good thing. It's like when you're researching. I don't know if I never look on bulletin boards. I very rarely now. I don't see as many investors on social media, but you find the top of bull markets, everyone's talking about stocks, and you find out if you're on bulletin boards, it's one stock talked about all the time because it's rallied. Just be aware of that. I mean, it's getting more attention because it's rallied. And so if you invest in a company that lots of people are talking about, that in itself, to say, hang on a sec, let's have a look at the valuation and all that stuff. And we all know the secret of making money in stocks is, buy low, sell high. Not buy the low, but, just saying, you should be buying when not many people are talking about it. It looks like good value, it's improving, it's growing, and then it rallies like hell to the point where, and you get, companies like that take a while to start going. They can take years to really shoot up to the point where it becomes really overvalued. And you'd be surprised how many people are shouting about it. But you've got to get in before everyone else is talking about it. Okay, this is interesting. When the fundamentals start improving and no one's really talking about it because maybe it's been a dog for a couple of years, that's a good time to start looking at companies. Not the other way around, where it's rallied like crazy and everyone's talking about it, or the bulletin boards or whatever talking about it. If you're likely to stop because it's risen a lot and you're not paying attention to its valuation, there's a good chance you're buying high. You're not buying low. Simple as that. I'm not talking about now go out and search for, I've talked many times about momentum. If you're going to search for companies hitting 50-week lows, you're unlikely to pick any winners because they're at lows because they're performing badly from a fundamental point of view. But what you want is a change in direction of the share price. That typically is breaking through 200-day moving averages and then making new highs. Like I said quite a few times, a good way to find companies is look at companies looking at hitting 50-week lows, and it takes about sort of 6 to 18 months after they've hit lots of 50-week lows before they start moving up and improving. But that break of the 200-day moving average is normally a good signal. It can be a spike and a drop, but it's normally a good signal to the researcher stock saying, let's have a look. are things improving fundamentally here? You know, like for example, S4 Capital is an example here. Their cash flow, free cash flow has gone up massively. The debt's come down, and they start paying a dividend. You know, and they've right-sized the company. They're not getting top line growth because the end market is still very soft. But even if they right-size the business, start making money, then it's decent value. And so they've gone from being a write-off stock to a company now that maybe good value that pays a dividend. So even that on its own deserves a re-rating. Now, if it gets the growth, that's another re-rating. But so just check companies. Don't go buying lows or in fact, 52-week high is a lot better than 52 lows. You're also probably buying too much. Like I said, it's very tempting to buy a company that's hitting all-time high. Just chuck loads in. Yeah, chuck loads in. And that's the thing. When you start, I mentioned so many times, start small, always, because you can manipulate the price at which you buy. If it shoots up and you've bought and you bought a small amount and it comes back down, it doesn't matter. It doesn't affect your portfolio. And then if you do further research, then hang on, this is good value. Something changing. You can buy some more then, and you can bring your average price down. If you buy a big chunk of it, you can't afford, and if it goes wrong, for example, if you only got 3% in and it drops by 50%, and you 1.5% of your total portfolio is invested in it, but you still believe the fundamentals are good, it's just had a technical pullback, and you can double your holding there, and it's still only 3% of your portfolio pretty much. It's not going to break the bank. But if this recent general sell-off has taught us anything, it's that there's always an opportunity to invest in a good company at decent valuation. This is why we should never chase highs, never chase the froth, when it's getting bubbly, the market's getting crazy, because the market generally, and this is a good thing, it's a general market sell-off. It's not specific to companies, fundamentals. There's nothing wrong with the company. Like, for example, a company could have bought a few months back, Ramsden's, is now back at a low, and gold price has gone back up now. So, I can't see. It's only sentiment. And you'd be surprised how, probably not surprised. We're herd animals, we're pack animals, and sentiment rules a lot of the time. When everyone starts selling, other people start selling just because other people are selling. And so you have that, disconnect between actual fundamentals of a company and the price of it on the stock market. And that's then an opportunity, because the company is not in any worse position than it was a month ago. It's worth checking that, of course. You got to think, is this company exposed to the problems in the Middle East? You think, no, yes, in some way. And if it's not, thinking, well, maybe I should buy some more of this. Like I say, if you missed out on a company in a good rise 6 months ago, revisit that company. Just revisit it. Thinking, okay, there's a company I missed out on. What company was that? Just go back and research it. Because if there is a cessation, I mean, let's be honest, it's not to get back to a good position in the Middle East, but if the fighting stops, it'll be a better position than we're in at the moment. So even if Iran, I think, I'd be surprised if Iran has such a chokehold on Strait of Hormuz now. If they just stop the fighting, maybe they just won't. Maybe just let things go. I don't know. I have no idea. But it'd be odd if they decided to continue to disrupt the Strait of Hormuz. If America threatened to go back in, say, we're going to pull out. If you mess around the Strait of Hormuz and we're coming back in, then I'd be surprised if they did. But who knows? There's so many different factions. Also, look within, okay? And you shall find the answer. It's possible you are holding a company that could be the next, next big winner. Could be your next winner, big winner. You have more of an advantage investing in a company you already hold versus a new hot stock you don't really know too much about. So almost sometimes, look within your portfolio, look at companies you've maybe invested in before and they've risen, you missed out on them. There's two areas of the market that you should be looking at. Within your portfolio, and companies you've researched but didn't quite get it or got out because it rallied, you got in at the wrong time, whatever, it's come back a lot. It's worth looking at. That's where the advantage lies. Firstly, you probably know more about the business if you hold it already. But its operations, its financials, its balance sheets, forecasts, etc. Secondly, you know less about the new company. I mean, we all do this. We all buy a company, and we've done sort of like a bit of research on it. Then we tend to do a lot more research after we have skin in the game. Of course we will, because it means more to us. So you've been holding the company for a long time. You tend to know a lot more about it. You've read a lot more of its RNS releases, everything. So, and thirdly, investing in a company you already own is less dilutive. And that's the issue. When you buy more and more new companies, it's just going to dilute your reward, especially if you don't know them. The more stocks you hold, it reduces the risk. It also reduces the reward. However, adding a new, less researched company probably increases the risk. So you're diluting the reward a little bit, but increasing the risk, which doesn't make any sense, Whereas adding to a company you know well increases potential reward without necessarily increasing the risk, because you know the risks a lot better. So sometimes it's just better to look within your thing. So even if you are down in the company you hold, revisit it. Don't write the company off of course, unless it's taking a massive chunk of your portfolio and you're down. Be careful there. Don't overexpose too much, because you may just have confirmation bias, whatever. Averaging down on an individual stock is not a no-brainer. So just to check in, as it is the averaging down. I talked about this last week. I covered this last week. I said there's very little, there's risk, of course, but averaging down on a S&P tracker fund is not a big deal, because like I said, since 1920, it's averaged between 7 and 8% return, and that includes all the biggest crashes in history, from the Depression, the dot-com bubble, to the Great Financial Crash, to the COVID pandemic. Including all those, is still returned, over 7%. So it's it always reverts to mean. It always recovers. So it doesn't matter. You're averaging down on over 500 companies there, some of the biggest and best companies in the world. Buying. So you better returns better buying or sell off. So with this, if you're buying a small market cap company, you're buying them because they can hopefully, grow and scale. Scale is important if you want a multi-bagger. Certain companies are limited in their scalability due to being capital intensive or market being highly competitive. I do think all those companies there I hold can scale. Different rates. But it's very rare you will get your initial purchase correct. When you buy a company, for example, so if you bought a company a while back and you liked it, it's still good, and you're down in it, that's okay. That's don't worry about that. Only worry if you've gone too big. That's the only worry you should have. You shouldn't worry about getting it, the purchase price, the entry price wrong. You shouldn't worry about that. This is why it starts small, because if the original investment thesis is intact, the share price goes down, not because of the company's fault, due to general market sentiment, which we've had really bad market sentiment. You can buy more at a cheaper price. My worst performer here. In fact, I think this is an old slide. 40% down. I'll give you an example, okay? 40% down, but only 1.1% of my total portfolio value. It's very small illiquid stock, so any sells during the recent sell-off will be magnified here. Any buys will be magnified. It's only 1% right before, so it won't have a material impact, if it goes any further. Even if it goes bust, it's not going to have a material impact on my portfolio at all. That's what I just said. So I might as well wait to see, because I think they're getting some traction commercially, but they've been in this position before. If they do get that second sort of OEM signed with them, by the way, if you don't know Xeris, they do technology for washing machines, then it's going to rally very hard, because that will transform their fundamentals, their revenue, their profits, everything. Okay. If they release news and it rallies by 20%, we could probably do a lot more than that. If they release the OEM news, we'll probably do more than that. In a day, I can buy more. Maybe even not on the day because it's very liquid, but I can buy some more. And just as an example, if I got £100,000 portfolio, and I even put 1% in, and it drops to like 29% down, and I buy another £1,000 worth, that brings it down to 17%. But I want to see that uplift first. So if I'm down at 37% at the moment, if it rallies, and it gets me to 20%, I buy some more, or 29% down. Then so that and that still only takes up 2% of my portfolio value. It's not a big deal. And a rallying by a multi-bag, if it's going to be a multi-bagger, a 17% rally, for example, or it gaining 17% from my loss won't be a big deal. But I also won't affect my portfolio value too much. So it's more of a long-term thing, Yeah. But even in companies that I'm in profit in, for example, like at one point, Ramsden's, I was holding 25% of these. I sold a little too early, but it was a good chunk of my portfolio. And I thought, I don't want to have that much. I think I may have sold like, I don't know where it was. I think I sold it when I was in profit. And I had 25% of it. When I sold some, it just kept on going. But fair enough, that's fine. I'm better off selling it. But now it's come back down. I'm only at 4% of my portfolio. I think, okay, I'm going to wait here. I'm going to buy some more of that. As long as the fundamentals are fine, I know about the business. I'm familiar with their operations. I can buy some of it because, good companies that turn out good. That's the nature. They go up and down, up and down. So if you know about them, wait until they go down, sell off a little bit, and start rallying again, and buy some more. Because that may take, if you look at these sell-offs, generally they take a few months to bottom out. So this here will probably take a few months to bottom out, roll around, come back in. You're paying about a 4% dividend anyway, but just taking your time. So I will look at the chart. Well, I'll check the fundamentals first, but for things like this, I'll look at the chart. I can see this. If they're opening 10 to 12 shops a year, I can see this continuing to scale nicely. It's not the fastest scale in the world, but can scale because they're very proficient in what they do. They know exactly the locations they want for these shops, and of course, gold price is strong as well, and their efficiency has grown massively since they listed. So I see this as an improving business. But again, sometimes when it shoots up like this and it gets a bit, overbought, it goes a bit nuts. You think, okay, let's take a bit of profit, but just hold a core position there, small position, and then scale back in. And in fact, when would I buy here? I would wait until. In fact, let's look at this. Let's look at I would wait until I want to see it. You often get this a bounce, a V-shaped bounce, a roll around, a bottoming out pattern. In fact, let's look at this. PSI. If you type in PSI, you get this. RFX. There we are. Click here for chart. So it's now at positive in the chart. It was previously, well, let's look at the chart. So it was previously almost downtrend, but it rallied back up today. So literally, it's basically just gone back into positive. And if you look back at when it was here and had a convincing move into strong, so back in April 11th, 12th, 11th, 12th of April 2025. So what was this? There we are, here. Yeah, 11th, 12th. You can see why this is a strong part of the chart, okay? So it works very well. You can see that previous highs, it hasn't managed to close above pretty much what? 245. And then on the 11th, it closed at 245. 12th, it makes 252. And then it pretty much goes up into a nice, it never, right, it does touch there, but gets up here. When was that? 23rd of June, 26th of June, 26. 26th of June, 26. That's interesting, isn't it? 26th of June. Oh, there. 26th of June, 26. The peak. So the price strengthening is works. And then all of a sudden starts moving down slowly from uptrend. too strong. Here. So I just want to build again. So you can see the thing here. So I want the price strength to build up again. It takes a few months, but it's like I'm not in any rush. It's a good company. I'll hold. I'll start buying more when it starts getting in the uptrend again. But yeah. But anyway, was there anything else in that? Don't think so. Yes. It's not going to be a multi-bagger, super multi-bagger. I think it'll bag over the next few years, 1 or 2 times maybe over the next few years. They keep doing what they're doing, probably get bought out. It's not like 1,000% or 10 bagger from here, but it may be a couple of bagger. But, it's basically decent, reliable returns. Multi-baggers, high-risk stocks, big reward, but bigger risk. So some of them, most of the time, those companies with very high, massive rewards never achieve that reward. It's such a high risk stock. So you're better off going for lower risk, but more nailed on, as long as the trading updates are good. I don't know. Yeah. In fact, so that I haven't got anything in that section, but yes. Is there any stocks you want to look at? Any stocks you want to look at? Let's look at. Yeah, Barry, FX has dropped. Yes, I looked at all the indicators, trading view, and found that super trend was a very good indicator. Super trend. Have a look at the super trend in S4. I don't know. Super trend. Oh, okay. Got to drop off early. They need to support a local business stay afloat. Wow. Well, I'm off to the pub with a mate. I'll catch up with the rest of the webinar. That's a good one. Trainware, Tiny Bill. I did Tiny Bill. I took them off the database because they're going to make a loss. And Craneware, have I added that? If that's a bigger company, I'll be adding that very soon. But I can look at the chart of Craneware. What else does someone say? Yeah, Hercules. No, it's sometimes you get these when they get suspension because they can't report figures. If you believe what they say in the RNS, for example, because they've acquired the companies, and it's taking longer to finalize because they have let's have a look. The audit this year has taken longer than expected due to the consolidation of acquisitions and further work needs to review certain subcontract contracts. It's a risky play, isn't it? Because it's one of those things where if everything's fine, it's just complex, and the auditor is saying, "Oh, we're going to need some more time for this," it's fine. Now, if the auditor finds something that's been overstated, then that's not good. So it's one of those ones where for people who like to trade a bit of risk and for the hope of a sort of breakneck return, it's a good thing. You think they come back out and say, okay, counts out, everything fine, just delay, they should shoot back up. But the question is, will they find some nasties in there? You don't know, do you? So generally, it's very rare they find nasties, and normally it is down to just the complications of acquiring and all that stuff. But I wouldn't want to take the risk, to be honest. Stock market is, in my mind, investing in this market is about not losing money, rather than trying to make lots of money. So you're thinking, oh, is this the kind of thing you invest in? If you want to, you can take a punt, but if you want a small amount of money, it may be fine, shoot back up, But I want to achieve gains over a couple of years, not on a quick turnaround. And I want to take out decent positions. So, I wouldn't be comfortable taking a big position. I can only take a small position, and that's just a small punt at this moment, just based on that. There's probably a trade in it. Like I said, if they come out fine, probably shoot back up. Craneware. I will listen. Due to AI be added to the back end now, 467, yeah. So I'll be upping initially. At the moment, I cover stocks up to about 300 million market cap. That, of course, is not a nice trend. You can see how far any rise in the stock price pretty much that's across that 200-day moving average, right? And you can see how far it is from that. So, if you're a value investor, you see value in it, fair enough. But you can be sitting on good value play for a long time. And unless they pay a chunky dividend, is it worth it? It's 2.4% yield. So I would say just on a chart, every previous rally. I mean, that was a cracking rally from here, but every previous rally they've broken above the 200-day moving average and moved up. And like I say, look how long it's to take before. Where it's fallen off cliff before, and the 200-day moving average up here, it's taken what from January, May, June, July, August, September before it broke the 200-day moving average again. So it's several months. I mean, it can be less than that if they come up with a cracking trading update. But generally, when they're far off the 200-day moving average, it takes a long while going sideways. So be careful there. Yeah, a tiny build. Did I add that? I can add it. I literally, this afternoon, I was looking through the broker coverage. There's a lot of impairments on their figures. So I was wondering, what's going on there? And I couldn't work it out. I went to add it. I don't think I did. I did add it previously, but I can add it to the Market database. Let me just check. I think it's if you see it, by the way, if you see a stock now and it's revenue generating and it's bigger, hopefully from tomorrow, if the site goes well, the back end AI goes well, I'll be adding more stocks. So if you get no, I don't want Hercules. So if you get this, there we are. Company not in database. It is in database, but I haven't picked the box to display it. So if you get that, but it's a company, and it's literally it's not like a resource stock with no revenue and no loss making. But if it's a decent company and it's not in there, now, at the moment I'm just be adding companies up to about 500 million. Okay, so but let me know anyway. If it's a good company you think it is growing, it's good value, and it's a profitable company, let me know. I can add it hopefully quite quickly now with this AI back end. Give me something to test, but I can add that. But there we are. Anything else? Do I see anything else that's worth looking at, David? Filtronic Top Styles come up with a trading warning. They didn't. Yeah, that dropped by quite a bit today. I was also surprised by how well Top Styles were doing in this environment. And I thought, what? Because it was scoring very well on the database for a while. And I thought, how are they doing so well? Every builder's merchant is not doing very well at all. The construction industry, the housing sector is not doing very well. How are Top Style doing well? So it doesn't make any sense. And they came out there with a bit of a hidden profit warning, really. So yeah. Yeah, Junior and Silica. Was there anything stuck out to me this week? No. No. I mean, Spectra had some excellent figures. I mean, look at this. All those figures here are good, right? And then you scroll down, 2026, 42%. Be careful of the forecasts, and that's why it only scores 47. Potential, look at that. Potential score, which is the forecast, is 6. And the potential is the most highly weighted score on the index. It's very important what's going to happen, not what has just happened. And so any rise in the share price probably won't be that long. So it'll bounce, but that's because people are only looking at the recent news. Unless they win some big contracts, then they're expecting to see a 66% drop. They've got a double whammy here of having a cracking here with a big contract in 25, and then 26 not being as good as 24. So the comparables are really rough on them. So, and even then it's a PE of 15. So thinking, okay, I don't think that's with lack of growth. I don't think a PE is cheap at 15. So yeah, be careful of things like that. Always check it forecast going forward. There we are. But it's who else? Did someone else say something? I don't know what super trend is. What is that? I don't know what that is. Look at the super trend and S4 and other share. How do I find that? Is it just is it just oh, I don't know. Is it up here on Is that what it is? I don't understand it. I don't understand what switch on is. You have to tell me, Robert. You have to give me an example of what that means. Where do I find that? Um, uh, indicators. Yeah, I don't. What was that about? I don't understand. Why was that? Why was that? What was that showing me? I don't understand. So, if I indicators, uh, super brand strategy. You mean? Oh, I don't know. Oh, get rid of that. What the hell? What have you done, Robert? Wait, let go of that. Yeah, but hang on. Look at this. Hang on a sec. Hang on. Look. Uh, what is it? S4 uptrend. Okay. So it's an uptrend there on thing, and now what? 26th of May, 26, 26, 26. It's only to look at. 26 there. They bought it here pretty much. Okay, this is honestly they can continue to perform regardless of what I like about it is that it's not risk free if nothing ever is. But if they continue to cut costs, the value and the cash flow goes up, and they're undervalued regardless of what happens. The end market's top line. If they can achieve top line growth again, they're probably going back to 850. But yeah, there we are. Anyway, listen, that's it. It's 3 minutes past, and I'll speak to you next week, and you'll see some updates. I'll email you about some updates coming soon. Uh, uh, need to run. See you, Alex. Wish you, yeah, happy Easter, everyone. Yeah, have a lovely Easter. I'll look into it, Robert. I will. But I've got the PSI, which is it's very good. Thank you very much. And speaking next week, thank you very much. Sorry, I can't help you anymore. Okay. I'll look into it. I will, Robert. Thanks very much. Happy Easter, everyone. Have a nice Easter. 4 days off. What will we do? The market shut for 4 days. For heaven's sake. That's not good for anyone, is it? Cheers, James. Cheers, Steve. Cheers, Robert. Thank you very much, everyone. Thank you. Thank you. Bye. Bye. Stop recording.